Excel Your Finances helps you replace your mortgage. Hi everyone, my name is Brad Hoffer. First want to thank Michael Lush for allowing me time to share with you about something I'm very excited about, which is the relationship between Excel Your Finances and Replace Your Mortgage. But first, let me tell you a little bit about who I am. I am an accountant. I've had multiple jobs over the years. I've been an auditor, accounting manager, business systems manager. My current title is a director of finance. In my free time, I developed this Excel Your Finances website and spreadsheet, and I'm going to talk a little bit more about that here in a minute. I serve my community as vice president of the school board, and my wife and I attend a one of the fastest growing churches in America called LCBC, and you can check that out at lcbcchurch.com. And I enjoy golf and spending time with my 3 boys and my wife. We just have a ton of fun together. So, enough about me. Let's talk a little bit about Excel Your Finances. The Excel Your Finances website began in 2010. And I started selling an automated spreadsheet, which I will show you more of that here in a minute. And I started giving away a free version of the spreadsheet in March of 2015, and in over a year and 3 months I've given away over 1,500 free budget templates. So Excel Your Finances literally has customers all over the world, and surprisingly a lot in Australia and Great Britain. So it's been a fun thing that I do on the side. It's not my main job. So to kind of introduce Excel Your Finances, I want to get you thinking a little bit about why I created it. So have you ever played a game where you didn't keep score? The example I have was when my son joined the under 6 soccer team, and the league did not want to keep score. So the kids would go out in the field. They literally didn't have goalies, so it'd be like 4-on-4, and they run up and down the field and they try to score. And it was interesting. Every time somebody would score, the parents would get excited. Parents were keeping score on the sideline, and the coaches would get excited, but the kids, the one who scored would be happy, but there weren't a lot of high fives, and the kids weren't jumping around like they accomplished something. It was just kind of something else that happened on the field. And I think that's what you find when you don't keep score. You kind of lose the point or the purpose of why you're doing what you're doing. And it's kind of interesting, the coaches would try to get the kids excited about the fact that they scored a goal, but if you're not keeping score and you're not trying to win, it kind of takes away some of the excitement that comes along when you do accomplish something great. To give you an example, just play table tennis sometime with a friend and don't keep score. It can be fun for a while, hitting the ball back and forth, and that might keep you entertained for 15-20 minutes. But it's interesting, if you're playing a competitive game of table tennis and you're keeping score, and some games you're winning and other games the other person's winning, you can literally play for hours and hours, because it's the fun of the competition keeps you engaged and keeps you motivated trying to win. So that's just my take on why you keep score in life. And I think it's the same thing with personal finance. So I'm assuming if you're listening to this video, you're a Replace Your Mortgage customer, and you have a HELOC, and my question to you is it working? Do you have a handle on your personal finances? Did you set some goals for yourself? Were they realistic goals? And are you on track to achieve them? And how do you stay motivated if you don't know where you're at on the journey? Basically, when you think about the purpose of Excel Your Finances, it's to give you a tool to help you keep track of your finances, know what's happening with them, set goals, stay motivated, and that's why I'm excited about the partnership with Replace Your Mortgage. Replace Your Mortgage is all about being motivated to accomplish a goal, and so there's a nice tie in there to what Excel Your Finances is trying to do with personal finance. Watch the video here. I'm going to show you a promo video that I made over a year ago. Now keep in mind, I've only been a Replace Your Mortgage customer for about 3 weeks. You're gonna hear some very anti-Replace Your Mortgage concepts towards the end. So see if you can't pick them out. Let's take a few minutes and watch the video. I'm going to click here. This is going to bring us to the Excel Your Finances website, and just real quick, I want to show you on the home page, Excel Your Finances has been featured in multiple, what I feel are very prominent websites. Mint.com did an interview with me. Christian PF literally has millions of visitors coming to their blog every month, and they listed me as one of their top 10 budget spreadsheets for the free version that I give away. Mr. Excel, he was one of the first ones to review Excel Your Finances, and just a great website with millions of threads of Excel tips and people asking questions and people answering them. And Nzera is a fairly new website that I came across, and the owner of that website creates solutions in Excel, and he did a very thorough review of Excel Your Finances. I was very thankful for that. And I'm also on CNET and mentioned in Modest Money as well. So just wanted to go over that with you, show you that Excel Your Finances is making some headway in different areas of Excel, personal finance blogs, and other areas. So let's get going here on this promo video, and this will give you a further insight.
If you ever try to do-it-yourself project at home without the right tools, you know how frustrating this can be. Think of personal finance as one big do-it-yourself project. If you don't have the right tools, it's going to be tough. The average family has over 1,000 transactions a year. It is next to impossible to keep track of all of these transactions without some sort of tool. When it comes to downloaded transactions, the first thing you realize is that your bank and credit cards do not use the same format. When you log in, you go and pull up your transactions, and you want to click download into CSV format. You'll want to grab the posted date, the description, and the amount. And from there, you're going to paste it into Excel Your Finances. Now this is where Excel Your Finances shines. You can easily align your data with the click of a button. Want to pull down the name of the financial account? There's a button for that. Fill in the categories? There's a button for that. Excel Your Finances already knows which transactions have already been posted and which ones are okay to post. So you can, with one click, remove all the transactions that need removed. You now review the categories and make sure they're what you want them to be. And you can make sure that your balance is in alignment and reconciled with your credit card company. And now you're ready to post the transactions. Once posted, it's added to the Transactions tab. Here you can filter, sort, and edit all of your transactions in one place. Everything gets accumulated into the Summary tab. You can easily see by account and by category what you've earned or spent, and then compare that over the past couple months or years. The toughest thing about budgeting is predicting the future. This is made a little bit easier if you know what you spent in the past. Excel Your Finances allows you to pull in any past 3 years right beside your budget column, which helps you predict what you think will happen this year. As you work down through your categories and make the changes you feel are necessary for this upcoming year, you have the ability to drill down. Just simply double-click on the category and it will bring you to the expense tracker. This will show you the expenses in detail for that category for any time period that you wish to see, and it will compare it to your current budget. This is extremely helpful in understanding what's behind the numbers. As the month progresses, you can see your actual spending versus your budget. The budget is prorated by the number of days that have occurred in the month. You also can compare how you're doing year to date. The red, yellow, or green lights are a quick indicator of the areas that you're doing good or having trouble in. Again, you can always double-click and drill down to see what is causing the problem. Now that you see how easy budgeting is, once you have all your transactions and historical data in place, let's move on to the big picture. If you ever sit down with a financial advisor, one of the first things they will do is make you put together a personal financial statement. All it is a list of your assets or liabilities in order to determine your net worth. This is important so that you can figure out what your starting point is. In our sample data, you can see that we started in 2009 and that this individual had a net worth of $26,000. The majority of this was from their house. So what their house was worth less their mortgage equaled $26,000. But then there was an equity loan against that house. xlyourfinances allows you to add any asset, any liability, or asset with liability. The importance of doing this is that when you're making mortgage payments, you don't necessarily see the benefit, but over time, you're actually gaining equity or increasing your net worth. So the big picture is to see how you're improving over the years to reach your goals.
All right, so let's see if you saw what was wrong with the end of that video. A mortgage, a home equity loan. Again, this is 3 weeks into being a Replace Your Mortgage customer. I made that video over a year ago, and I am happy to say that, I truly believe the Replace Your Mortgage concept is the right way to go. And I'll tell you, it's kind of interesting, as an accountant, working with the multiple companies that I've worked for, I have tons of experience of working with they call it a working capital, but basically it's a line of credit with the bank. It's secured usually by inventory or other business assets. And a lot of companies, they operate out of the working capital, and especially if you have a lot of inventory, you don't just sit with cash in the bank. You take that cash, you buy inventory so you can sell it, but you need cash flow for daily operations, and that's where working capital comes into play. So it's kind of interesting, even though I work with a working capital line of credit every single day, I never thought for a second to use that for my personal finances. But obviously, as businesses use this, it is probably the most efficient way to run a business that is, let me say, not cash rich. So at the end of the day, Replace Your Mortgage really bridged the gap for me personally and helped me realize that I could do this for my personal finances. And so I'm really excited because I think I can really pay down my mortgage fast and get it paid off a lot quicker than if I would have just stuck with a mortgage. The mortgage game is frustrating because I would send extra money to my mortgage company trying to pay it down, and then later regret how much I sent because then we were tight on cash. And I never wanted to take the step to go take out a line of credit on top of my mortgage because I'm trying to pay it off. And so I was afraid if I took out a line of credit, I would just accumulate more debt there and not be disciplined enough to pay it down. It's interesting with putting the home equity line of credit in place. I got it done a couple weeks ago. I'm already more motivated to pay it off, and it takes the pressure off knowing that I'm putting all my money against that line of credit, and I don't have to worry that I'm going to be cash tight because I can always draw it back if I need it. So let's move on here. That was why I joined there. So how can Excel Your Finances help you? Basically I look at it as a tool. And if you don't have the right tool, like you saw in that last picture, things can get really messy. And a HELOC can really make things complicated because with your personal finances, because if you're just looking at the balance in your HELOC, you might not be seeing the whole picture. And if you're not being held to a standard mortgage payment and that you have an interest-only period and you're not paying attention to what you're doing, you might actually be going the wrong direction in terms of paying off your loan. So I really think Excel Your Finances can play a big role in helping you. And the sample data we're going to look at, I just took a little snippet of it here. You can see the PNC HELOC. This is just sample data. This isn't actually my data. It's just data that I made up a few years back. But I changed some of the names for this video. So instead of saying mortgage, it says HELOC. And what I did is any money that was going to savings, I took it from savings and put it against the HELOC, because the whole idea is you wouldn't just put money into a savings account. You would take that money, you'd put it against your HELOC and try to pay it down as quickly as possible. So I made some of those modifications with the sample data, and this is what it looks like after I made those changes. And you can see the balance going down. Again, this data was pulled together just with somebody who wasn't a Replace Your Mortgage customer and was just paying down a mortgage and also putting money aside into a savings. So you can see the effect here just looking at this and how that HELOC has gone down. One of the interesting things at the top of the page, you can see the total income for each year and the total giving and expenses. So let's look at 2013, and you can see the income was $61,000, the giving and expenses was $46,700, and the total was almost $15,000. Now they cleared $15,000, but you can see how much the HELOC went down was just about $15,000. So what's going on here is as you pay money against your home equity line of credit, you still have access to that money. So Excel Your Finances shows it as, hey, you have netted almost $15,000 this year, but the reality is, as a Replace Your Mortgage, all of that went to paying down your loan. So let's go into the actual spreadsheet that I'm talking about here. There's videos that will show you in detail how to set up your Excel Your Finances spreadsheet and how to use it. And I'm not going to focus on that in this video. I'm going to just focus on this sample data that I have and kind of how Excel Your Finances helps you track what's actually happening as you use it. So I tried to transfer some of the cash that was sitting in this bank account against the HELOC. What you're looking at here is in Excel Your Finances on the summary page, you simultaneously can see your bank account and credit card balances, and then down below you can see where the income came from, where you spent the money. So there's kind of two separate sections on one page here, your financial accounts and then your different categories of where that money came from and where it went. So looking at this, the financial accounts, this is your balance as of these dates. So the balance as of the end of 2011 was 178, and as of this data goes through April of 2016 was around 99,000. You can click on this button up here, and it will switch it from showing all the years to showing 1 year. So you can see here in 2016, a balance going from 104 down to 99,000 in 4 months there. And you're like, why is it showing balances in June if you only had data through April? Well, the spreadsheet is recognizing that today is June 11th, and so it's saying, hey, your balance as of June 11th is this balance. Since I haven't entered any data since April, that's why the balances are the same there. Let's go back to looking at the years. So whatever year you put in over here, it's going to start with that year. So if I put 2013, it starts with that year, and it'll show you 12 years at a time. If I put in 2011, which is when this data began, you can see how that goes. So here's my bank accounts, my HELOC. The HELOC goes in as a negative, that's money I owe. And here's 2 credit cards, and then a health savings account. Now you say, why are you saving in a health savings account if you're trying to pay down a home equity line of credit? While you might be singular focused that you want to pay down your line of credit, and I agree with that, if you have a health savings account at work, that is just a very smart practice to put as much money as you can into your health savings account. There's a government limit to it. Anytime the government's limiting money that you can put into something like that, there's usually a reason, and it's because it's literally the only way you can get triple tax savings. You can put money in tax-free, it can grow tax-free, and you can pull it out tax-free. The only nuance to that is it has to be for medical purposes. All right, enough of that sidebar, but that's why that's still on there. All right, so as I've entered data into this spreadsheet, here's the income that was earned from 2 different employers for this family. They had some other income, some tax refunds. They gave some money to their church and other donations. So what we ended up doing here to make this, to show you how this is going to work, is when you first put in the HELOC, you put it in as a beginning balance, and that's down here at the bottom. So that's why there's such a large expense in 2011. You're like, well, you truly did buy a house, and it cost that much money, and that was an expense that year. I'm going to come up into these fixed expenses. As you record the payments, so you can see in 2012 here, there was $18,300 worth of payments made to the HELOC. You say, well, why did the principal only go down $13,000? So every time you record a payment, it's offset by the interest expense. So the difference between these two numbers, if I highlight them both, you can see there was $5,200 worth of interest that year. The next year, you can see the interest is going down. So as the principal in the loan is going down, the interest that you're paying in is going down. And you can see that there was a payments of $112,000 made, and that the principal came down almost $91,000. And this was not full years. It was like half a year of 2011 and 4 months of 2016. So it's like 1, 2, 3, 4, probably about 5 years. That just using this sample data of this person's income and how they spent their money was able to reduce their home equity line of credit by almost $91,000.
So as you can see on the screen here, Excel Your Finances makes it real easy to track all your expenses in whatever categories you want. And you can get as detailed and granular as you want, because you can add as many categories, or you can keep it simple and just have a few categories. It's completely up to you. So let's talk a little bit about setting a goal and trying to pay off your HELOC as fast as possible. So what we're going to do is just show you how you would do this moving forward. So if your balance is $99,000 and you want to try to pay that off in 3 years, you can just do a little bit of math here. We're going to take $99,000 and we're going to divide that by 3. And it says, okay, we would need to pay $33,000 a year to pay that down. Now, looking at what has occurred in the past, that might be a little too aggressive. So if we just take $99,000 and divide it by 4 years, that's a little more in line. And you see about $25,000 there. And I guess one last option would be to take it over 3.5 years. So you kind of have those three numbers in your mind. 25,000 was 4 years, and 3.5 years was 28,000. So how do you apply this in Excel Your Finances? So if we go, we're going to take a look at a budget here. In the budget tab, what I do to make it easy is I pull in the past 3 years of activity so that when you're looking at a category, you can see what you typically spend in past years, and then set a goal for the current year that you want to try to achieve. So I did that using the sample data. I put goals in here that were reasonable based on past spending. And I kept the income, I increased the income a little bit, but I kept it fairly the same. And the only thing I didn't fill in is the payments to the HELOC and how much the principal would go down. And the reason I did that is because I wanted to see how much money was going to be left to pay to the HELOC. So I can literally come in here after doing all my budgeting and say, I want to pay down $29,534. So if you remember the three calculations I did there, that was around the 3.5 year mark to pay that off. So the way the spreadsheet works, you can see that now shows that you have 0% net. And if you went and looked at what you pay in interest over that year, you would be able to calculate that exactly. And I actually have a loan calculator in the spreadsheet. I'm not going to do that right now, but I'm going to say it's probably $3,500 is probably a close guess, depending on what your interest rate is. So I'm going to make that a negative up here. And so that gets us $26,000 to principal, and that was right in the 3.5 to 4 year range to get this completely paid off. And the way it appears here, because remember, you still have access to those funds, the $26,000 becomes what's the net remaining, and it's basically a 39% of your income is put towards the HELOC, and that's how that ends up looking. So then you would do that at the beginning of the year or at any point, and as your year is progressing, you can see how you're doing in each category. So basically it's saying, hey, you wanted to pay $26,000 down in principal over 102 days. This is through April 11th. You should have paid $7,200. You can see that we've paid more than that. So we're actually ahead of where we needed to be. And you can see the corresponding to the HELOC payment, and the difference is the interest again between these two. And you can come down through and look at the other categories. The green means you're doing good, so you're under budget. The red means you're over budget, and the yellow means you're close. And you can come down through and see how you're doing. And it also takes a look at your income. So we estimated more income from employer 1, but we made up with it from more income from employer 2, you can see here. So that's just a quick look at Excel Your Finances and how the budget works. You can see how powerful this is. Once you get that goal, you establish that goal, you put it right in here into the budget, and then as the year progresses, all you're doing is taking 10 minutes a week, dropping your actual transactions into the import tab, posting them. They all accumulate here in the transactions tab, and then you can come to the budget and just look and see exactly how you're doing, and it's going to be helpful to motivate you to make sure that you're staying on target of achieving your goal of paying off your HELOC completely. So that concludes my presentation of Excel Your Finances and how I think it can help you replace your mortgage. I guess the final thoughts I would leave you with is, do you know what your goals are? And are you keeping score? If you're interested in purchasing the Excel Your Finances spreadsheet, you can go to xlyourfinances.com, and I'll just show you here quick how you do that. When you come to xlyourfinances.com, just go to the home page, And if you just slide down a little bit, you can see that I'm selling it for $19.99. And this buy now is PayPal. And when you purchase that, you get a download link in an email. It gives you the password to access the video instructions, and it takes you step by step, just like I'm taking you through on this video, how to set it up and how to use the spreadsheet with a lot more detail. So I hope you'll take the time to go check it out. And I think also Michael Lush is going to be putting a link right on the Replace Your Mortgage website, so that if you forget the name of the website, you'll be able to find it from there as well. And with that, I want to say thank you. Thank you for your time. Thank you for allowing me to share Excel Your Finances with you. I wish you all the best. God bless. Good night.